Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Wednesday morning, December 11th, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. Wall Street's main indexes closed lower on Tuesday as technology sector losses offset gains in communication services, while investors waited for key inflation reports that may influence the Federal Reserve's next interest rate decisions. Stocks fell and bond yields rose, with Wall Street traders gearing up for inflation data that will help determine whether the Federal Reserve will cut or hold rates next week. Just a day ahead of the consumer price index, the S&P 500 pushed further away from its all-time highs. Wednesday's CPI will offer Fed officials a final look at the pricing environment ahead of their next meeting. Any indication that inflation progress has stalled could well undercut the chances of a rate cut. Consumer Price Index data is slated for release on Wednesday in what will likely be the most important economic report before next week's Federal Reserve's interest rate decision. Stock investors' obsession with technology cut both ways on Tuesday as optimism over quantum computing duked it out with anxiety about overvaluation in artificial intelligence. Bearish sentiment ultimately won out with major indexes closing slightly lower. The Dow Jones Industrial Average fell 154 points or 0.35% to 44,247. The S&P 500 lost 18 points or 0.30% at 6,034. And the Nasdaq Composite fell 49 points or a quarter percent to 19,687. Among the S&P 500's 11 major industry sectors, only three ended with gains a day ahead of the November reading of the Consumer Price Index, one of the last major reports before the Fed's December 17-18 meeting. Headline inflation is expected to have risen slightly in November to 2.7% from 2.6% in October. The Producer Price Index report will follow on Thursday. Communication services up 2.6% was the biggest percentage gainer among S&P 500 sectors, with help from a 5.6% rally in shares of Google parent Alphabet after it unveiled a new chip. The biggest percentage decliner was real estate, falling 1.6%. The S&P's biggest index point drag was also from technology, down 1.3%. It was weighed down by 6.7% drop in Oracle shares after the cloud computing provider reported slightly disappointing results late Monday. Before that update, optimism about artificial intelligence had helped send Oracle stock up more than 80% this year. Adding pressure to technology, the Philadelphia Semiconductor Index fell 2.5% after China's Monday announcement of an investigation into Nvidia over suspected violations of anti-monopoly law. The probe was widely seen as a retaliation against US curbs on China's chip sector. Computer makers Dell Technologies and Hewlett Packard extended losses that started in November when they reported soft sales of home computers. Stock of chip maker manufacturer Micron fell 4.6%. One bright spot in technology shares is Google's parent company that gained 5.6% as the tech giant announced a win in its effort to compete in quantum computing. Google on Monday had unveiled the state-of-the-art chip named Willow. Walgreens Boots Alliance's shares jumped 17.7% after making it the S&P 500's biggest percentage gainer after the Wall Street report reported that private equity firm Sycamore Partners is in talks to buy the pharmacy chain. The stock has still lost more than half its value since the start of the year, reflecting reduced traffic in its retail locations due to online commerce. The S&P 500's biggest percentage decliner was Moderna Incorporated, which fell 9.1% after Bank of America reinstated coverage of the company with an underperform rating. Meanwhile, Alaska Airlines shares rose 13% after it raised its fourth quarter profit forecast, while Boeing gained 5.5% after the plane maker restarted production of its 737 MAX jets last week. Among other individual stock movers, software firm DB fell 16.9% despite raising its forecast for annual results. In mid caps, luxury builder Toll Brothers fell 6.9% after its quarterly results beat expectations, but its current quarter forecast disappointed. In the bond market, the 10-year Treasury yield rose 0.021 percentage point to 4.219%, the second consecutive day of increases. The bond price sell-off reflects nervousness that a higher than expected inflation print could cause the Fed to pause its policy of cutting benchmark interest rates. Traders have ramped up bets the Fed will cut rates this month after Friday's jobs report showed an uptick in unemployment. Cryptocurrencies Bitcoin is trading near $96,500. In commodities, West Texas Intermediate crude was little changed and spot gold rose 1.2% to $2,691 an ounce. Key events to look out for this week is tonight's US CPI and tomorrow US initial jobless claims and PPI. That's it for today. I will see you again tomorrow morning. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing. Stay inspired. And remember, it is all about money.